We're now looking at the portfolio in review. For the last 12 months, the end of financial year has come to an end, and we get to look at how Gary's model portfolio that we've been following each week on these Tuesday interviews has performed over that period. We're also going to have a check-in, because we're now 6 months through, halfway into that calendar year, for the 2025 blueprint and to understand where to next. And then finally, the individual shares to really have a look out for, where Gary's looking to put them back into the portfolio, add them and make the changes. So good things to look at on the 1st of July, 2025. Happy financial year, Gary Glover.
Yeah, we got to start from scratch, set our new goals again, and away we go. So, I was just happy to sort of, actually one of my goals was to sort of try and get a 20% return for that year. I looked in doubt there for about the first probably 6 to 9 months there, but did come home with a wet sail, so that's important. Now, I guess that's the key. Sometimes the market can be a bit choppy, a bit tough, or it's not moving around too much. I guess you got to wait for the fat pitch, as I'm not sure who coined that one. Where Jim Rogers or something like that, I think something like that. So yeah, that's it is a difference there. Sometimes you go back and look at your portfolios up for the year. It's sort of a couple of really good ideas, really high conviction ideas. If you do get a heavy position on and then get a decent move, it moves the needle. So I know sort of like like the one that comes to mind there, sort of John Ling sort of got 10% position, stocks at a 50% jump in price there. That's that moves the needle on your account. That's a 5% gain on your portfolio for the year. So you get a couple of those. That moves the needle. That's why the great investors and stuff there, when they sort of get that see something high conviction here, they do get a reasonable sized position on and try and get a decent sized move. So that's probably the key lesson there. If you can try and keep everything else contained, and just make sure you have a good hit there when moves right for there. I think sort of ResMed might have been the one last year, Chris, that had moved the needle for the account as well. So get those sort of bigger moves there. So just waiting for those sort of really good opportunities to sort of set up in the marketplace, and then just try and build yourself a decent sized stake in some of those better positions. That's probably the key.
Well, it's reminded me of a few quotes. What you're saying there is maybe a viewer might remember who said this, but the rule number one in investing is don't lose money. Second rule is don't forget the first rule. I can't remember who that was, but another one.
A couple of brokers in my time have said in the early days.
Well, we both started in broking offices. No surprises there. And the other one is that the S&P Capital, really some interesting, I think it's Dr. Steinberger. But when they go back and analyze their trades, so they have a shorter cycle, they obviously have a lot more trades than we do as momentum traders.
Yeah.
But they'll look back over their year and say, well, hang on, if you didn't get these 2 or 4, quite often half a dozen or less trades for the year, then you really didn't make money for the year. So quite often they'll look back and say, well, these were the mega trades that I was on. These were the huge breakouts. And the rest of it was just tiny singles etching out maybe like a 20, 50, 70% return. But if they get their big trades, they're like 200, 400% returns in that. So just a handful of trades makes that difference. Obviously, they've got different measures that we're using, but still trading in review. So you talked about the goal that you had for financial year 2025. I think it was north of 20%. So how do you feel about that?
I'm pretty good there. I mean, it's sort of like I say, like I think I made half of that gains up in the last quarter there, Chris. So yeah. So you might argue that's not good. I don't know, but I think I just wait for the opportunity to see the I mean, sometimes it's pretty messy. I don't think it's the easiest market to trade in personally. When you sort of see, it's probably more a trend traders market. This market, so as in like a CT, sort of like if you, where they're just buying a break.
All right, sit tight.
Yeah, and just hold it until the moving average breaks. So it's not, so it's almost people don't like that type of trading there, but it's but you're essentially just buying a moving average breakout. and then you're holding until that moving average
Crosses over again.
goes over again. So those, some of the moves have been massive. So some of the stocks there, so, and we keep sort of highlighting some of the bigger names there. But I mean, you've got CBA on 33 times there, Telstra on about 32, 33 times there recently. So, I was explaining to a client yesterday that, for my first 2 decades in the market, CBA traded between about 11.5 and 14.5 times for those 20 years. It probably never traded over 15 times for my first 2 decades in the game. Yet today we're double that, and the earnings profile is probably half
What you were used to.
of what it was in those times. So that the earnings growth was actually a lot lighter on. In those periods there, they'll have periods there where they were basically growing the investment banking sort of side of the market there, and had investment products, and that was a real growth there at the time. So the earnings were growing a lot faster when the multiple was higher. So so it's
hard to make sense on that. But as you're saying, CTA, you get those moving averages stacked, right? And they set it up and just sit until it crosses back over.
Yeah, so for whatever reasons there, whether it's inflation there, whether it's ETFs sort of targeted buying there, but it is fueling these big moves up and down. So I think some of the sell-offs are just as brutal. So some of the stocks that look like they're pretty cheap are getting incredibly cheap. The momentum just drives them so much lower. But then the stocks everyone wants to hold, no one wants to sell them. They just get driven incredibly higher as well. So it won't always stay that way. There'll be at some point it'll change there, but it does make it hard there because it's almost like common sense. Not common sense there, but if you're used to a sort of certain type of market here and certain logic, and that's the thing about markets. Markets aren't always sort of logic. They can be irrational at times, but guys, I for the last 2 months, I keep reading on Twitter. There's so many people, just publishing bearish stories, and even traders that I've seen in the past have some good ideas. Doesn't make sense. It's this is a short. It's like the tape is clearly telling us the market wants to go higher. So you just you got
to be in front of a roaring.
You got to respond to price. So we can give ourselves logical reasons as to why a market's expensive and stuff there. But if the price action is contracting on low volume and then it's bouncing on higher volume, it wants to be higher. And then if it's struggling to go down every time it cools off there and it holds the moving averages or congestion a sideways pattern, and there's no sort of selling there. That's why the technical analysis and stuff. I know it's had its detractors over the years there, but price action sort of will give you a good indication. Now that's why I love the cycles. If you get a bit of a roadmap on the cycles and you get the price action and the volume is supportive of that, then you just sort of stay with that move here. So that's all I've done really. It's just waited for the cycles to sort of set up there, and then when the price action is confirmed there, I've had a swing. So
well, let's talk about those cycles, because those cycles, we love the blueprint that you give us at the start of the year. And as you're saying, you get ready for the Qs. When the price action confirms it, you stack up the portfolio and away you go. That's worked in your favor in the last quarter.
Yep.
Let's have a bit of an update on those cycles, because we've got this huge candle in the NASDAQ. Over in the US, it's now pushed out through those highs. We are in that sweet spot. You were talking about sort of that March, possibly April through to August, which we're getting to. Here we are, the 1st of July. How are we on that blueprint? Is there any update to it now that we've cracked the highs? What to from here for the NASDAQ?
Yeah, so we know our sweet spot this year in terms of our post-election year cycles, and also the 5th-year cycles as well, sort of, kind of that end of March, sort of early April window, all the way sort of through to probably early August as well. So considering we've sort of got an early April there, I think this is probably going to keep moving up until that early August sort of window. So you look at those 60-year cycles as well, which is kind of the Gam referred to as a bit of a master cycle there. You had a tariff sell-off, 60 years ago, and the market bounced back to a new high within 90 days. So we've done that. We've actually got there in slightly faster time. And yeah, so you get a bit of messing around here, but yeah, I mean, most of that trend is, the longer term trend. I think the S&P and the Dow, they've just sort of sat on top of the previous high. So like a sort of, like a good trend, or just like build like a staircase on top of the previous move, it leads to the sort of going higher. So, it just confounds me. People, I mean, I know valuations are pretty high here. They are, I think valuations are expensive here, but you can't fight the tape. This is, with the take was pretty strong here. We're getting volume, we're getting momentum there. We're getting enough sort of news there to possibly drive this on here. So, so really probably looking for a drive up into early August. So probably be nice here to probably go a bit further here. I thought it might be a bit more of a grind. I thought it was only going to sort of pull up under the high, pull back into October, give it like a handle, and then have the end of year rally. Or this might do what the Nikkei did. Nikkei sort of broke through. I think it rallied sort of 6 weeks above the high, and then it pulled back like 12 weeks, sat on top of the high, and then took off again. So we might rally here into the early August, cool back, sit on top of the high, back into October, and then finish the year up there. That's kind of the cycles there. Sort of that, you think about seasonally, that September, October can be sort of weaker months there, sort of seasonally. Does fit in with a lot of the cycles this year. So, but again, it's still a bit of a mild pullback here. So the cycle does sort of, does call for us to still be fairly buoyant till the end of the year. So there's plenty of bears that can't comprehend this market rally until December or January. But I still think that looks quite possible there, even though some of the stocks look expensive. We do need, as I sort of highlight to my sort of clients there, we probably do need to see some rotation here. Because there are plenty of stocks that are, so it's a good thing if we have seen CBA come off the last couple of days, and some of the banks retreat, some of the growth stocks have sort of started to retreat as well. And then hopefully we'll see other sectors, other stocks start to, and I've seen a few breakouts in some stocks that are probably been languishing and starting to base and build there. So that's actually quite a good sign. So we've seen more of that. That'll be positive. So, but we want to see more rotation. That's the key there to seeing bigger gains. Otherwise, again, we just got to review the price action there. We're not seeing much distribution. I've seen maybe a day or two here occasionally, Chris, of distribution, but not, it's when you see a cluster of distribution, like 4 or 5 days of heavy selling and markets down, that's when you get a bit nervous and a bit concerned there, but I'm not seeing that. So, but the leading names in the States, they just keep leading. They just keep grinding high here. Plenty of sort of cup and handles there. So, it's, we're sort of starting to sort of see some healthy rotation now. So sort of, even the gold names have cooled off here, seen some of the backs there, but if you look at CBA and ANZ, this is probably the unique aspect in the market is that, last week ANZ was at $28. So it was trading on about 12.8 times, I think, from memory, and the yield was around about 5.8% fully franked. And CBA is on 32.5 times, and the yield's like 2.5%. So you buy one bank on, less than half the multiple of another bank and 2.5 times the yield of another bank. Whereas normally in my sort of
very comparable.
Yeah, my 25 years on market, they're all trade very similar. So one trade is slightly more expensive. CBA always was probably slightly more expensive, but it used to be like 11.5 to say 40.5, and ANZ might be say 10 to 13.5, and then NAB might have been 11 to 14. So so they all have had a few point range, but they could spend 10 years in a 3-point range on earnings there. That now we're sort of seeing that disparity. So so the four banks are kind of they're kind of running different races there. So don't get me wrong, I think CBA is the best bank, probably the best bank in the world. I personally bank them. I wouldn't change that. But are they 2.5 times better than everyone else, or probably not? They might be maybe 10 or 20% better than everyone else. So, but yeah, we do know that market's not always rational, but yeah. But for the market wise here, we just want to see some rotation, and that'll be healthy for the index. Because then if we see the market sort of just hold here, and then we see some of the leaders cool off a bit, and then other stocks start to perform. Once those other stocks have cool off and pull back, then they can bounce back, and then they can drive the market further on here. So that's a healthy aspect we probably need to see here. If we are going to keep running into the end of the year, we must see that rotation.
And that's what the old portfolio theory kind of was. You have diversification so that there's some easing off, other ones it's gaining, and then it sort of maintains the value of the portfolio. That can work for indices as well. The weighting is obviously massively important. Before we get to the individual shares, I just wanted to ask you very quickly on the Dow Jones. You've talked about the S&P, the NASDAQ, and the ASX all right up near their highs. Well off this for the Dow Jones. Does this change, or does this have any does this sort of alter your blueprint at all because it is a bit off the highs?
Yeah, look, it's a laggard there, so that's probably, it was weird because remember the Dow was the leader out of the last, coming out of this sort of last last midterm year, it was actually probably led. So but now the NASDAQ's sort of firing, and then probably because that's a bit more risk on, so we like the quality first and then diversify. So yeah, but the reality is that the Dow has sat on top of the previous high, Chris, and stayed pretty robust. They just started to take off there last week here. So yeah, so I can't see, maybe we'll go up to the high. Maybe this will set up a handle there, over that sort of September, October there. But the reality is, like most like nice sort of stocks and indices there, when they're building on top of the previous highs there, and only 8, 9 times out of 10 they're going to go to new highs. So can't see how this is not going to go, at least go back and retest that high there around 45,000. So it looks still pretty positive.
And on the rotation theme, you've been talking about obviously CBAs and the highs, but we need to see some of those laggards to sort of come into gear. It's not that you want to be trading the laggards, but you're keeping an eye on these laggards so that you know how to position the portfolio. Earlier in the year, and anyone can look back through the videos, particularly since the April low, you traded exceptionally well with the 0, 1, 2, 3s, and they were coming out of lows. So it's monitoring this sort of behavior that these companies are having. And we're noticing from the Friday conversations we have, there's just consistently a lot of metals that are in that launchpad space. They're sort of trawling out the bottom. So we've talked about uranium, we've talked about lithium a fair few times. Rare earths are doing something similar as well. So just in the last week, I noticed that alumina was actually coming up in that list as well. There aren't too many left on the ASX that do it, but here we are with Alcoa. What's setting up with Alcoa here?
Yeah, we're just seeing a few more, obviously, the metals sort of coming through there, and look, obviously gold's been the heavyweight this year, but that's obviously, we started to see a bit of a cool off in the gold price over the last month or so. So some of those gold stocks are sort of wound back, but that should, again, we should start to see rotation and start to see other metals start to move there. So we saw the copper ETF, go to new highs there last week. So I think you'll see other metals as well here. So aluminium price is still pretty robust. Look at that chart there. It's still not as strong as copper there, but still moving in a positive manner there. But I like the sort of stock here, how it's sort of bounced quite nicely out of that April low, and then really just sort of pull back in a corrective manner. Pretty light volume too. Look at those. Look at the sort of the corrective weeks as well. So after that high there, we had 2 weeks sort of down, pretty light volume, and then pretty light volume again, and then we've got a bit of a breakout on the volume there last week there. So can be a bit of a volatile sort of share, but it looks pretty constructive to me. And I'm looking for just prefer to sort of see them, build a few higher lows and then start to break to, taking out some of those higher highs as well is a good sign here. So, I think this looks pretty solid here, really. So it looks like it can run. It's one of those things that can, these metals, they can run too when they're on. So, I do like the fact that, if they do break up here, they really can kick along and keep going. So
Definitely the metals can. Yeah, they can run with great gusto, and they always run further than what we think. And you've noted that many times with the commodities markets. Credit Corp, something interesting here. So possibly the 0, 1, 2, 3. I think you talked about this at the time. What I'm interested in here is this kind of channel. Is this what you call an accumulation cylinder, or how are they different?
Yeah, and that's more just sort of just kind of a corrective decline there, I guess you might sort of say. So, I mean, Corp has been trending down here, so that's probably the negative aspect there. But we did see the signs of a bit of a base, but then it has sort of broken below. That's kind of negative, but that's kind of more of a corrective sort of channel there. And now we've sort of broken out the upside of that channel there. And I like the fact that there's been a bit of volume pretty heavy over the last probably 2 or 3 weeks. So that probably looks like accumulation coming out of this sort of first, sort of higher low there. So that channel. So yeah, this looks like a positive breakout there. So I just think, if we look at, again, we're trying to sort of see, either a base being formed or some high lows being formed, or, starting to break above some swing highs as well here. So where we're starting to sort of see that there. So just, we are seeing a lot of those channel breaks that we've just seen there. That we've seen a lot of those recently that are those are the ones that have sort of kept going for us as well. So, if you're just using basic trend lines, once we come out of it, again, we got a first high low in there and then breaking a channel as well. That's good confirmation there. And I just think the volume looks pretty solid there. So it has underperformed actually, Credit Corp, I think. So not on an unreasonable valuation here. So yeah, could bounce quite nicely here.
Well, something that has been slipping in price dramatically is iron ore just dropping down, 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 which doesn't help the federal budget. And I've jumped ahead to talk about Champion Iron, but Iluka's the one next in the chart. Iluka, we've got this, you're talking about those trend lines and sort of that corrective decline. This has been coming down into a narrowing fashion and really getting tight. What's interesting here is that I've heard you talk about a few times where they sort of break out of it to the downside and then up. So this can be interesting. What's happening here with Iluka?
Yeah, no, it is interesting theory that, because those sort of descending wedges, you're kind of waiting for the bullish break there, but this actually had the bearish break there. And I've noticed in the past there that actually when they do overshoot like this, when they come out, that's even a better signal as well. So they'll tend to sort of come out here. So I did see this sort of break outside of that wedge and look pretty bullish, but it's come back here, but it hasn't gone to a new low. It's probably used up twice as much time here now. So had that rally there for 3 or 4 weeks, and then we've probably gone sideways for like 6 to 7 weeks here and haven't gone to a new low here. And you can see the volume is up as well. So we're definitely seeing signs of possible accumulation there. So just looked like last week it was sort of that last sort of rally out of the sort of possible high low here was on pretty solid volume. So this is definitely one I'm sort of keeping an eye on there. Probably just want to see a bit of a B wave break for me just on the daily. So start to break above a couple of swing highs. But I think if this sort of comes out of here, potentially sort of, could have a solid move there. So I haven't added any position here yet, but just it definitely sort of caught my eye there just because it have had that overshot. Has had a bounce there. That's a strong downtrend really. And it hasn't gone to a new low here in twice as much time. So it's struggling to go down here now. So might need a base here. Sometimes it's, a bit like that ResMed there a couple of years ago, might need to build something a bit more, but it is looking sort of constructive there. So, we're going to need some new stocks to sort of, hold this market up here and come to the fore here. So just interesting seeing some of the metals there show some constructive signs.
On the metals, Champion Iron, we've got iron ore slipping. The federal budget's not happy with that, dropping down. Gold's now taken coal's places to be the third biggest export for Australia. So that's interesting with how those prices really do impact it. Champion Iron, way down here, false break, FB, that you've got marks on the charts. And then this red line, does this correspond to something on the far left side of the chart? Maybe an old high or something? Okay.
Yes, it does. Yeah, so that is an old low there as well. So it has sort of come down and retest the old low, but then had a bit of a bounce there and then come back for another retest of that. So we've sort of got sort of, a key old low there, which has been bouncing off there, but we've just got a bit of a false break here. So we like to sort of see it come back and retest those lows. And we have seen in the past there some decent moves there. I think when that move in July of 23, that was a false break, and then we went back up to a brand new high there. So if you look at that, so we had the lows of the middle of the year, and then we had the or July, August there, I guess that low there. Yeah, they just marginally broke below the previous low and then reverse there. So you can get sort of sharp reversals of those old lows there. So, and we've seen plenty of those recently. Actually, one I haven't mentioned there actually is, so we're trying to just sort of saw this week, but I noticed Treasury wines has come back to retest an old low from quite a few years actually. It might have been the 2020 low, so like a 5-year low. So it went, I think it marginally broke below that in the last couple of days.
So it's 2020, yeah.
Yeah. So it's sort of it's had a few issues there. The volume's up as well on Treasury, so definitely want to keep an eye on here. But oftentimes we're seeing markets come back and retest sort of 2 or 3 or 5-year lows, and then that's the point where they can sort of bounce there. So it's funny that the REH was one that I was sort of looking to buy on the last low Reece, but I was looking for that to break below an old low, like on a long-term chart, and it didn't. It got close, but it didn't go to a new low. But I noticed it's actually weakened off here in the last sort of week or two here, and it looks like it can go back to the retest that old low. There's a low back in 2022, 1293. So the fact that market went to a marginal new high, often that means it's got to go back to a marginal new low. So it needs to sort of break below that 1293. That's a level just to keep an eye on for those sort of stocks as well. We're just seeing those sort of big wide ranges over the last sort of 5-7 years there come back and retest, get a slight new highs or slight new lows. So there's a few stocks out there like that. So yeah.
Well, I think we got a lesson in here in this week's report that you've sent through. If we moved into Clarity, CU6, Clarity Pharma, a stellar return, something that you studied in great detail. No doubt was in one of the model books, and we'll put a link to those because they are well worth going through and imprinting that in the back of the retina. What are we learning from in this chart here with CU6?
Yeah, so I've got the old lessons. I probably should get rid of those, delete them up there, but it's important just to sort of keep them on there. For me, just to sort of go back and sort of, just to sort of study those moves. Because if we start to sort of see another breakout there, the key thing here is we do have a bit of a B wave break here on an old leading stock there. So that can be positive in the short term for the stock here. The negative is the size of that move. So when you're sort of gone from $9 down to $1.50, that's a fairly large correction there. So, I mean, we have seen Drone Shield do like a 70-80% correction, and now it's bounced back up to near the old high. So, there's always a chance it could go back there, but that's a rarity. What Drone Shield has done here, that doesn't happen very often. I think Afterpay might have been the last one I saw have a really big correction and then go back up again. So there's just not many that will go back up and have those big moves there. So this one, CU6 looks like it's sort of breaking out there. So some good signs there. But just remember, there's a lot of overhead here, and there's a lot of people who bought the stock a lot higher. So every time it rallies here, it's going to be facing some sort of headroom there. So, yeah, exactly. So look, that's why sort of you got to look at what's above here. That's the key message there. So these charts can look quite good here. I think Nuix is the other one. It's a bit like this one as well. Yeah, it had a great year and pulled back, and it's had a really large correction. So it's struggling to get going again, just because I think there's so much overhead. When a stock's at new highs, no one's bought it. At a loss.
Yes, everyone's cheering together. They're all winning. Everyone to the right.
Yeah, so the stock moves a lot more freely. Whereas if there's a lot of overhead here, you'll see them. So you'll see that if you go back and look at the stocks that have had so much overhead supply like this, they'll rally and they'll have moves and stuff there. But when that rally ends, you'll see the sell-offs will be sharp. The selling just comes in and they pull back really sharply. So look, it can rally, can have a bounce there, but it'll work really hard, and when eventually tires, it'll come off pretty quickly as well. So don't, just gotta be careful holding into that sort of trap there.
Well, that's a very good insight to end on the week, and say thank you very much, Gary Glover from Novus Capital.
Thanks.